Yeah, I just want to talk about the Holy Grail trade setup as well as the average directional index indicator, a couple things that I've been reading and studying lately, and hopefully you guys can get something useful out of this. So what's the average directional index, also known as the ADX? So it was created by Wells Wilder, who is the creator of the RSI, and what it does is it measures the strength of a trend over time. So you can think of it as a momentum indicator. It is a non-directional indicator, meaning regardless of the trend direction, the stronger the trend, the higher the ADX is going to be. Another way to think of it is an absolute value. So even if the trend is downwards, negative if you will, if it's strong, it'll still have a high positive reading on the ADX. It is plotted as a single line with values between 0 to 100. The default time setting is 14 bars. And if you're curious as to how it's actually calculated, it's calculated based on moving average of price range expansion over a given time period. It's another way you can confirm that you're trending, basically. So a low ADX will indicate ranging, so a lot of sideways action. So furthermore, along interpreting it, a low ADX, as stated just now, was going to correspond to a ranging market, so lots of price bar overlap. And this is often characterized by your classical chart pattern formations, your pennants, your flags, triangles. So these are times of consolidation, right, where accumulation or distribution is occurring. Conversely, a high ADX, specifically one above the 30, is going to indicate that markets gain momentum and is trending. And the thought that we're going to use for the trade setup is that when you're trending strongly, any reaction should be followed by a retest. Here are a couple abbreviations that I'm going to use in the talk for those that are newer to trading. And these are the two main sources that I got information from. Linda B. Rashke, apologize if I'm butchering that, is in both books. So what's the rationale behind this Holy Grail trade? Oh, as a side note, there's no real Holy Grail trade in trading. There's nothing that's going to guarantee profit. There's nothing that's always going to work. They named this more as a joke, and she even talks about that in the book. So don't take it literally. So, when the price makes a new high, or conversely a low if it's downwards, in a strong trend, you should buy or sell the first pullback. This is synonymous with the saying, buy the dip. Once you're in a position, what you're hoping for is basically continuation. Right, the trend's your friend. You're hoping that when you get that pullback, you buy the dip, you're going to retest that high and make a quick scalp, if you will, some profit. The Holy Grail uses precision to decide when to enter after retracement, right? So everybody's going to say buy the dip, but what exactly, when do you buy the dip, right? Generally two typical outcomes. One, you're going to retest that swing high, that new swing low, and stop there, fail, in which case you can garner a small profit, or if you're lucky, you'll get an entire new continuation leg of the trend and let your profits roll. At a minimum, you're offered a very low risk entry point, and as alluded to prior, it's a solid scalping tool to have on your belt. Sorry, this slide got kind of cut off at the top. Basically, these are the rules for the buys or sells if it's a downtrend for the Holy Grail. So first off, you're going to want a 14 period ADX. and it must be initially above 30, right? So that's the first thing. You need to have a ADX above 30, and that's signifying a strongly trending market. That's what we want. Second off, you're going to look for a price retracement to the 20-period EMA, and that's usually accompanied by a downturn in ADX. Logically, that means your ADX is going to turn down because you're losing momentum during times of consolidation, right? Because it's not trending. So you're going to need a ADX above 30. You're going to need to retrace to the 20-period EMA. And once that price touches the 20 EMA, you're going to place a buy stop above the high of the previous bar. So number 3 is basically word for word from Rashke's texts. There are a lot of variations on this trade. Some people use the SMA. Some people will place their buy at a different location. They'll just buy once it touches the EMA. So her technique is to place the buy order above the high of the previous bar that touched. Obviously, again, it's reverse. If it's a downtrending, you're gonna sell. Sometimes it's going to run through the EMA a bit, but eventually it should find support or resistance at that level or around that level. Once you're filled, so once your order fills, you're going to put your stop loss just beneath that most recent swing low. You're going to trail stops, and then once you hit your target, it's up to you. She doesn't have definite rules as to how much of your position you close. Maybe you're like, maybe you're confident that it's going to continue on and you just want to close 50% of your position. That's up to you. Strictly speaking, her target is just that most recent swing high, and this will make sense when we pull up some figures here in a minute. If you're stopped out, she states to re-enter the trade at the exact same spot as you entered originally. And then finally, after a successful Holy Grail trade, you want that ADX to be above 30 again, but also actually higher than the ADX was on the initial trade. A couple other important points. Generally speaking, there's only one Grail trade in a market per time frame. She does state you can use this technique on any time frame. You need to be aware, though, that every market's different, every asset's different. For example, I do a lot of Bitcoin trading. The 15-minute chart, the 5-minute chart, the 1-minute chart, the 1-hour chart, using this technique did not look good at all. So it's up to you to back test any tool you use, not just the Holy Grail, any indicator. You need to back test, you need to study the market, you need to perfect your technique. Don't just take someone's words literally, and it's okay to adjust it and add on your own filters to someone else's idea. The best trades are going to occur when the ADX is high on multiple time frames, and obviously it's always going to retrace to the shortest time frame, EMA first. And a failed Grail is an ominous sign, which often means that there's going to be a much greater move in the opposite direction. And oftentimes a failed Grail occurs because the trader failed to identify an opposite trend on a higher time frame, i.e. you're focusing on the 1-hour chart, but then you didn't check the 4-hour and there's a opposite trend. So we just talked about this, being aware of the opposite trend, making sure there's not divergence in trends. And lastly, it is one of the highest probability trades you can make. It tends to occur later in trends, therefore, it's closer towards reversals, so to speak. So be conservative, don't be stingy, don't make huge targets to exit the position just to improve your RR. Okay. It's a scalping tool. Take your profits, leave. And then this is also, these are links to the books to where you can purchase them. Alright,